What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to speak about exactly when you should start buying more Tesla stock, considering the fact they're already down to nearly $100 per share from highs of well over $400. A lot of people are going crazy over Tesla right now. It is so clear to see. All you have to do is look online, and everybody is speaking about Tesla. I found this quite funny today when I went ahead and went on to Seek and Alpha, as I tend to do, and I looked at the news and the analysis, and the amount of people, the amount of news and individual, stock pickers speaking about this company just over the last day, I think is more than I have ever seen for literally any company ever. People cannot get enough of Tesla right now. So in today's video, what I want to do is I want to take a look at what has happened with Tesla as of lately to make them, become even more exciting than usual. We'll speak about the fact, they had a kind of a 4 to 5% delivery miss that led to a 13+% down move. That is already off the back of a huge downward move, despite the fact we saw, sales growth still of 40% and production growth of 47+%, which are absolutely huge numbers. We're going to take a look at the company's evaluation. We're actually going to take a look at, pretty much for the first time ever, Tesla's PE ratio, and speak about just how low this company potentially could come if, big money and if bears stay in control for long enough. And hopefully by the time we do that, we'll have a little bit more of an idea of when you should potentially start adding to your Tesla position, in order to limit your risk. So you're not just buying constantly and then there's a huge sell-off, buying, then a huge sell-off. Hopefully we'll be able to protect your capital and get you some good investments. I do again need to apologize about my voice, my friends. I've been sick for nearly 2 weeks at this stage, but I ain't gonna let that stop me. We're coming through with daily uploads. I appreciate everybody who checked out the first video back. You are legends. Please hit that juicy like button for more content. Subscribe if you're new around here and end up enjoying this video. And with that being said, let's get straight into it. So again, the big news is this, and this is what primarily led to the most recent part of this sell-off here. Tesla sets record with 405,278 deliveries in Q4, but they missed estimates. So yes, again, they are crashing based off of record deliveries, which sounds crazy, but that is the climate we are in as of this moment in time, my friends. So they actually produced closer to 440,000 vehicles, but they did not quite deliver them all. Now, if we take a look at Tesla's actual their press release, you'll see that we continue to transition towards a more even regional mix of vehicle builds, which again led to a further increase in cars in transit at the end of the quarter. So Bloomberg had an estimate of about 420,000 deliveries. Some people had as much as 430,000. Depending on which number you take, it was a 4 to 6 or 7% miss all in all, despite the fact, again, it's record deliveries. And again, just from that kind of press release, another couple of important pieces just to keep in mind for investors. In the US, the car maker is extending the $7,500 credit to Model S and X to boost sales, while in China, Model 3 sedan and Model Y sport utility vehicle buyers are offered up to 10,000 won, $1,450 if they take delivery by February 28th. So again, this is the kind of the first time we've seen Tesla doing this, ever really offering these actual cash incentives. Shares have recorded their worst annual performance in 2022, shedding 65% of its value. You will see a lot of analysts coming out and constantly updating their price targets on Tesla as of this moment in time. Who really cares what they have to say? This is Tesla at the end of the day. I think most Tesla investors know to an extent at least what they are investing in and why they are investing in it. Also, just one more thing in regards to Tesla's production capacity and consumer demand, because I've seen a few people online arguing and almost bickering about production being over sales. I don't think that's a bad thing whatsoever, but Tesla owns factories across the US, China, and EU, and 5 factories are in production. Its demand is stronger than supply, but landing fairly close within supply. I think, yes, maybe it would be an issue if, say, for example, there was nowhere near as much demand. Say they were able to produce 1 million vehicles and they're only selling 200,000. That would be a huge, huge issue. But being able to produce an extra 6 or 7% over what you are actually delivering does not seem like all that big of a deal to me personally. It's much better, for example, than the other way around. Now, the Chinese EV market currently accounts for more than 1/3 of Tesla's sales. China's EV market is absolutely huge. It is growing faster than other markets. there is a lot of ground there. There is a lot of sales to be made there. And we got this piece of news. Tesla's China boss, Tom Zhu, to take charge of US factories, US and Europe sales operations. Now, Tom Zhu has obviously done a fantastic job if Elon is coming along and saying this. He is now going to be pretty much second in command right behind Elon for Tesla. It's absolutely huge. The move comes at a time when Elon Musk has been distracted by his acquisition of Twitter. Hopefully he's gone from there soon, or gone from CEO soon. Makes Zhu the highest profile executive at Tesla after Musk. The Tesla posting showed that Zhu retained his responsibilities as Tesla's most senior executive for China and sales in the rest of Asia as of Tuesday. So this man is going to be taking on a lot, truly a lot of responsibility here right now. But again, he's had to adapt an awful lot in regards to everything that's been going on in China, and he's done a fantastic job. I think everybody's going to be keeping a very, very close eye on this name for the considerable future. Every single Tesla investor, I know I most certainly will be, but I think this is going to be a good thing overall for the company. Now, this here is Tesla's weekly chart, and we're going to take a look at this. We're going to compare, you know, from those highs of nearly $415-ish a share to where we are now, all the way down at $108 a share. We're going to speak about what kind of areas we've broken through recently that are important to understand. I mean, the amount of people who will have had sell stops trigger, the amount of people who will have been wiped out of their position, things along those lines, and where we need to look towards next to try and dictate when we should start, you know, potentially loading the boat up on Tesla if you haven't already been. Because this really is the first time in the span of probably 3 years that we have to look downwards with Tesla properly towards next areas of consolidation, towards areas of support, where we can really figure out where the stock's price should be to an extent. So Tesla currently has a PE ratio of 33.3, and that is while we're at a price point of about $108. Now, the majority of companies right now, their PEs have been absolutely slashed due to the majority of companies dropping in value over 50+%. There was a long time there where 20 or so had become the normal PE. I can tell you right now, for legacy OEMs, they are nowhere even near what is traditionally the average PE. They are more so around the 5 to 8 mark. So Tesla is still, you know, being valued 6 to 8 times more highly in general than legacy OEMs, even at these prices, even after being slashed, as the article said, about 66+% so far this year. Now, is that justified? I think in order to answer that question, you kind of have to ask yourself, why do people invest in Tesla? I'm going to make myself bigger again because I want to ask you the question, why do people invest in Tesla? Is it just because they're an electric vehicle company? I mean, no, there are an awful lot of them. Is it just because they're the biggest? No, it's not whatsoever at all. It's because of their technology, and it's also because of Elon Musk. It's because of their energy solutions. It's because of the other sides of their businesses. So you cannot just value them as a legacy OEM. It would be absolutely ludicrous to do so. And so for that reason, you have to ask, well, what is a slightly more reasonable PE ratio for Tesla to come down to in order for, you know, the price to make sense? Well, I think a lot of people will argue that 33 is already far too low, considering historical averages, if nothing else. You can see we're here right now on the chart. We have broken through all of this right here. I mean, this here was a lot of consolidation. This was a lot of accumulation. This was people fighting each other to see who's going to win. Is it going to come back up or come back down? You have to look at this from the perspective of, you know, if we go back to November 19, for example, this is only August 20, and it's gone up, I mean, at the peaks, nearly 10x in that short period of time. People are fighting to try to bring the stock back down here. People were buying and selling non-stop, and then boom, it broke out. And there was just so much buying pressure since. Even, yes, obviously there's ups and downs, etc. But I think everybody knows there's been a lot of buying pressure with Tesla. That is gone. That has been broken through. That means nothing to anybody anymore. So again, we're at a 33 PE ratio. We have smashed through the last area of accumulation. Where is the next? Well, the only next real one we have is right around here. I'd say somewhere in the realms of 61 up to $68 a share, this general area here. Now, if Tesla was to drop down to there, what kind of PE would that put them at? Off the top of my head, I'm not sure. Somewhere in the realms of 20 to 22, which again, to me, to even just say that sounds absolutely ludicrous. To see Tesla trading at that, I don't think is something any investor from 2019, 2020, 2021 even would have contemplated seeing. So it's for that reason I don't think that they can come all the way back down there. I really don't, even though that is the next logical step on this chart. There also is a tiny gap created at 85, so who knows, maybe that's what big money is after, and maybe that's where it's going to come back down to, or maybe it's even just going to clear out this $90 level. One thing's for sure, it shows no signs of slowing up yet. And I mean, you just look at that chart, you can see how rough it's been. This is the weekly chart. You can see how tough it has been for investors. I mean, with a long-term outlook, guys, I think a lot of people are going to be happy buying at these levels, and power to you, nothing wrong with that. I and most other Tesla investors have bought this company at considerably higher levels from where we are now. The first time I bought it, I might have been a little bit lower. I'm not even 100% sure, but definitely I have bought it. I remember buying like around here and here, things along those lines. So yeah, some positions are down, and Tesla is in a much better position fundamentally than it was back then. So you should say, you know, technicals aside, from a fundamental point of view, this is the best, most valuable, most nice looking Tesla we have seen in years and years and years. From a technical point of view, you would have to be inclined to wait till probably to start buying at about $90 a share or so from current levels, and then every kind of $5 to $10 down, with the expectation that 65 should be a floor, maybe 61, 62 should be a floor. But again, this is Tesla. Tesla is not a stock that traditionally has made sense. It's not a stock that people have traditionally invested in for safety, so that does not need to, you know, happen either. But in my opinion, again, long term, these prices are already good to buy. But if you want to try to be a little bit more savvy, try stretch your money out a little bit further. I would be personally waiting until the $90 or so range, and then dollar cost averaging my way down until we finally see a turnaround. Because again, guys, it's not all Tesla's fault that they are down like this. Most companies are down 50-60% or so. That's just a fact of the matter. If it's not oil related, that's just a fact of the matter right now. But anyway, my friends, that is my update video on Tesla. I really do appreciate you guys watching, and appreciate you guys putting up with my husky voice. If you did watch this video all the way to the end, you, my friend, are a true legend, and I really do appreciate you from the bottom of my heart. Your support means the world to me, baby. If you did enjoy, all I ask is that you hit that like button if you haven't yet, and subscribe if you want more content. Anyway, my friends, I hope you all have a beautiful, blessed day. I'll see you in another video very soon. Peace.